I'm Danni Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoff, Head of Investment Solutions at AJ Bell. We're going to be discussing the performance of AJ Bell funds over the first quarter of 2024 and dig in a little bit to what the rest of the year might have in store. James, thanks so much for joining us. Let's start with how markets performed in the first quarter.
Hi, Danny. Equity markets had a really strong start to the first quarter. The US and Japan did particularly well. If you look at the US market, the Magnificent Seven, or the so-called Magnificent Seven, were dominant again, but some of them actually fell by the wayside. And we saw a broader market rally across energy and financial stocks. If we come across to the UK, it had a positive start, but not quite so strong as the US and Japan. And the same with Europe and emerging markets. A decent start, but the likes of China was particularly volatile. India did okay, but yeah, lagging behind their developed market peers. In bond markets, government bonds struggled a touch, whilst corporate bonds did okay and riskier high-yield bonds did a bit better.
So what have been the main drivers of this?
If we think about the economic backdrop, there's a sense that that's improving across the UK, China and Europe, and that's been received positively by equity markets. For bonds, the challenge has been inflation, which remains volatile, and global growth is improving, which means that interest rates might not need to be cut quite so quickly. On the inflation front, we've seen some really good progress in the UK, and we should continue to see that in the months ahead. But actually in the US, there's been an uptick, and that's been unexpected, which has changed the pricing of interest rate expectations for this year. Going into this year, there was an expectations that the Federal Reserve in the US would cut interest rates in the spring. That's now been pushed back to the summer, and bond markets are responding accordingly. And you've seen US Treasury yields and UK gilt yields rising on the back of that, which is causing the pressure in bond markets. Thankfully, the economic backdrop is improving, and riskier bonds such as high yield bonds are actually less sensitive to interest rates. So that's been a good start to the year for those.
Do you think we're at something of a tipping point then when it comes to the global economy? Particularly I'm thinking about the UK and Europe.
Yes, potentially. Ryan mentioned at the start of the year that there seems to be a tipping point in terms of interest rates. It feels like the peak is now behind us in interest rates, and that means that bond markets might in time become more stable, and the income component of their return becomes more attractive. What we can now see is that as those interest rates filter through to the underlying economy, actually the economy's held up much better than people expected throughout last year. There was lots of expectations of a global economic recession. Actually, that's only occurred in a handful of places. And this year, things are picking up. So equity markets have been covering that story quite closely, and sentiment has followed that higher.
So how have AJ Bell funds performed since the start of the year?
The funds have captured the returns in equity markets well. It could have been better. We run diversified country allocations in terms of equities. So we could have captured some of the returns, particularly in the US, better in the first quarter, but that wouldn't be in keeping with our investment process, which really tries to manage the risk of these funds over the long term. If we think about the range, the higher risk portfolios have higher allocations to emerging market equities. They've been underperforming their developed market peers such as the US, Europe and Japan for some time now. So their returns have been dampened by that. Whereas lower down the risk spectrum, the lower risk portfolios have felt the headwinds of global government bond markets, but actually they've had a healthy allocation to cash, which is protected from that somewhat. In the middle of the range, they've been in kind of a sweet spot. They've had good allocations to developed market equities and not quite so much in emerging markets, and they carry less in the way of global government bonds, so they've not felt some of the headwinds there.
Have you made any changes to the funds?
We made some changes to the funds in January this year as part of our annual strategic asset allocation project. We don't jump around in terms of our positioning. We're long-term investors. We look at the long-term prospects for markets. And unless something significant in terms of market dynamics change, we don't expect to react. Having said that, if we do get a significant change in markets, we will review the positioning and reposition accordingly.
James, thanks so much for talking to us today, and we look forward to chatting to you and the rest of the team throughout the year.
Thanks, Danni. My pleasure.